Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. Let's keep going with the analysis of the gold market. As usual, on the weekend we have prepared a report, have updated some fundamental issues, taking a look at the new forecasts from the big banks, what actually everybody thinks and what expected. So I put the link on the report down below in the video description. What is actually really interesting in the current situation, that it's a lots of concern or just some questions. If you just briefly look at the Twitter and other social media, it's big concern as well. It makes sense to buy the gold. What's actually, maybe it's already overbought, maybe it has reached its sale and currently we will not see any appreciation. To understand that, you should take a look not only on recent data that you are getting, such kind of the payrolls on the CPI numbers or something like this, which is actually showing just the top of the iceberg. But you need to take a look at the ongoing processes in the big economies to see what's going on, which is actually mass media not always puts on the surface. For instance, you could find not much information about Japan, for example, what's going on there, or United Kingdom. Yes, here and there you see that low gross domestic product, some inflation is rising, some consumption is dropping, but if you put all this stuff together, you will see in what traps actually stands major G7 governments. I'm not even speaking on the France. And here are some more issues concerning the North Atlantic spending and social problems, and you will clearly understand where all this stuff is going to, and that lets you to make a conclusion on the perspective of the gold market. That's particularly what we're talking about in this report, in addition to some other things that relates directly to particular to the gold market. And that just led us to suggest the perspective on the long term, whether we should out of the gold or we should keep the positions in the gold and so on. So speaking about the short-term picture, currently market, recent week was really successful to us because market was going from 1 hour target to another and has completed lots of butterfly patterns on the way up. And once again on Friday, take a look at start precisely the target that we have specified, or either 603, the butterfly extension. The tricky moment stands that market is overbought on a weekly chart, and that makes us to be very careful to any signs of the bearish performance here, because it could trigger the retracement. Speaking about butterfly terms, even about the butterflies, its minimum target usually happens when the market shows reaction on the butterfly targets at the 30% pullback, and its minimum reaction, because butterfly is actually a reversal pattern. So even drop to the 3420 area down to this trend line, it should not be treated as something outstanding. It's absolutely normal. I do not want to say that's definitely will happen, but just for example to make you understand the overall scale of the current performance. So that's the first moment. So we have to be careful. And here we on the daily chart, we do not have yet lots of trading stops. We just could consider some levels. So for instance, here is 3490, first FIB support, and the confidence around 3420 area. 3490 might be interesting if the pullback starts, and because this will be the bread and butter buy trade. We have great thrusting action here that has good momentum, and since impulse still stands in place, and with first retracement, we should buy the first dip to trying to ride on a possible continuation of this momentum. Second moment is that market could keep going to the 1618 extension with the 3734. And to understand this, whether it's really going to it, we need to see what reaction will be on intraday charts on this particular target. It is more to say that 3734 actually stands very close to the nearest monthly target, which is 3743. But once again, as I said, market is overbought on the weekly. Whether the current impulse and background will be enough to break it right now, or market will need another driver, such as, for instance, I don't know, very poor CPI numbers in the middle of the week. We will see. So that's just overall situation, what's going on a daily, weekly background. Now, precisely to the practical issues, what we're gonna do in the beginning of the week. On the full time frame chart, there will be two potential patterns that we have. First one is a butterfly that stands already in place, and it might go into the 3620, just because you can see here is nice acceleration. With such an acceleration, very often butterflies turns down. Usually it tries to complete the next target around 3620. This will be 1618 extension. And next pattern, although it's a bit early to speak about it, but potentially when you see the butterflies, you always should suppose and you should suggest possible head and shoulders. So it might be shoulder, head, and then shoulder to be formed if the scenario of the retracement and reaction on the on this target will start. So that will be the next pattern that we'll be watching for. Now, how we should understand what's particular is going on, whether the market is going with this butterfly or we start searching for hand and shoulders. Keep an eye on the hourly chart. It will be very simple. So with this upper action, this butterfly, we have inside of it two more or less significant support levels for this time frame, of course. First is 35.75. Next is 35.60. So if market is falling to the next butterfly target with the 34.20, it has to stay above one of these levels. Whether it will be above the first one or above the second one, but it has to stay above it. If market will somehow erase this rising, this previous upward action based on the payrolls, start dropping down to the 35.45 area, it means that with the big chances we are going to the head and shoulders page. So we will not come to the 34.20. This in turn means that on a daily chart, most probable we will get the pullback at least to the 34.90 area, and maybe the hand and shoulders that will be formed here in the way of some ABCD will lead us directly to the 34.90 target. That's in general our plan that we intend to follow. But the first step, as I said, watch for these levels. If you would like to take a long position, you do not need to place the stops too far, probably either right below the confluence or as a maximum below 35 area. But most probable that below the confluence will be enough, because if market feels okay, it should start up prediction right from this level or that one. So for a position taken, once again, if you're sure of the bullish context, you would like to take the long position with this pattern, think about split the position in parts. Take minor part here. If market drop to the confluence, add more. Because we do not know from what particular level market could reestablish upward action. So that's the first issue that we intend to deal with. And then we will see what will happen. Either we will get 34.20 target, or we will get the clear signs that this pattern is breaking apart, and we start watching for a reversal pattern, which is a hand and shoulders. That's our plan for the Monday, and then we will see what will happen. So that's all for now. See you on Tuesday, and take care.